you know, what gets measured gets done, and then you drive it into the compensation program, clearly will have an effect in the organization. I wanted to pick up on, you talked about shareholder value and the social license to operate, but you know, one of the key stakeholders are the shareholders. So what are we seeing? What are the shareholders looking for? And there's different shareholders in terms of their time frame and whatnot. But what are we hearing and seeing from our shareholders?
I'll jump in.
Yeah, absolutely, absolutely. And by the way, that was an open question to the whole panel. So.
I would say that the shareholders would expect that the board understands the risks, that they've got the solid mitigation plans in place to do that, that they're capitalizing on the opportunities that might be out there associated with this area, and ultimately that they're making the decisions in a thoughtful way. So back to the point that Alan was making earlier, you know, you could be all and spend all on the issue, and that's really not the point. The point is that it needs to support a business strategy. It needs to support the growth product good of it as well. So I would say it's the ability of communicating that point to the shareholders. And it also depends who the shareholder is and who's financing this. In many cases, in fact, a lot of companies that we talk to will say, nobody ever asks me about this. They only ask me a question when something goes wrong. So again, it really depends on how you're engaging and who that investment group is. Others, if it happens to be, if you're getting financing from the International Finance Corp, Inter-American Development Bank, definitely it's an issue that they're embedding into the lending covenants that they're talking about. So it really also depends on that. But ultimately, what I've seen is there is, you know, the opportunity is to demonstrate that you're understanding the risks, you're better positioning your organization throughout it, and you understand what your stakeholders are going to be asking you for today and in the future.
Yeah, I think in our situation, I look at it as there's really two kinds of shareholders, and often they're in the same organization. So there's the portfolio manager, and exactly as you said, he or she only cares when you screw up. So your permit was lifted, or your mine was blockaded, or whatever. And then there's the people within the sort of shareholder engagement side, or the Canadian Coalition for Good Governance, and all of those sorts of people, who are much more interested in how you perform from a social perspective. The problem is, in a lot of those organizations, those two people actually never talk. And so the only thing that happens with your portfolio manager is he or she is going to sell. When you've messed up, they will not be the ones that are clicking on your CSR report on the web to see how you're doing. They're only interested in how have you done.
So it's interesting on that front, Wendy, I'll come to you, but certainly when you talk to the major institutional investors, of course they're signatories to the UN, and there's principles you need to do around that. They do, you know, they're pretty public in terms of their policies around this. So if you went to the Canada Pension Plan Investment Board, they would have their policy and process, build it into due diligence. And the whole thesis would be, you know, good practices there lead to long-term value creation. So that is out there, and it'd be interesting if you're seeing that at play. You're talking a bit about disconnect, Alan, but it sense that some of the big institutional investors are very much moving down this path to look at, because that's what they're in. They've got long-term liabilities. It's long-term value creation.
Maybe I'm a little more cynical than that, because certainly even in those large organizations, their portfolio managers are paid to perform. And so I think there is a disconnect between the public perception and what they're putting out and really what they're putting their investment managers under the gun for.
Yeah. And I think those large investment managers are looking at it from the standpoint of risk. They've done so much work on each of the companies that they're involved with, and this part of their overall risk assessment. I would say that the smaller shareholders, we don't hear very often from them on this issue, but we do hear often from them if the return on investment is going down. So I think looking at social license, if wherever possible, it can have a return on investment fund, but I don't think it's front row center with the shareholders.
So I think this is an evolution, and I think it's probably a question of stay tuned, because it's likely to get higher up, and there's going to be more maturity in the process around that. So you could see a changed behavior on that. But let me shift gears.